to the increase in U.S. consumer prices in December. U.S. consumer prices rose slightly more than expected in December due to higher costs for energy goods, signaling persistently elevated inflation in line with the Federal Reserve's outlook for fewer interest rate cuts this year. The Consumer Price Index, CPI, increased by 0.4% in December following a 0.3% rise in November, the Labor Department's Bureau of Labor Statistics reported on Wednesday. Over the 12 months ending in December, the CPI advanced by 2.9%, up from a 2.7% increase in November. Economists surveyed by Reuters had predicted the CPI would rise by 0.3% for the month and 2.9% year-on-year. However, progress toward the Federal Reserve's 2% inflation target faced challenges in the latter half of 2024. Factors such as a resilient economy, the potential for broad tariffs on imported goods, and mass deportations of undocumented immigrants, actions that could drive inflation, have prompted the Federal Reserve to project a shallower path for rate cuts this year. President-elect Donald Trump's incoming administration has also pledged significant tax cuts, potentially further stimulating the economy. Meanwhile, consumer inflation expectations surged in January, driven by concerns that tariffs would increase goods prices. Excluding the volatile food and energy categories, the core CPI rose by 0.2% in December, following 4 consecutive months of 0.3% increases. Year-over-year, the core CPI climbed by 3.2%, slightly lower than November's 3.3% gain. Shares of Eli Lilly dropped by over 6.5% after the company forecasted lower than expected fourth-quarter sales for its weight loss drug, Zepbound. No rate cut is anticipated during the Federal Reserve's policy meeting on January 28 to 29. While economists expect fewer rate cuts in 2025, opinions are divided on whether the central bank will reduce borrowing costs again before the second half of the year. Goldman Sachs forecasts 2 rate cuts this year, in June and December, a revision from their previous expectation of 3. Conversely, Bank of America Securities believes the Fed's easing cycle has concluded. The Federal Reserve began its easing cycle in September and has since reduced its benchmark overnight interest rate by 100 basis points, bringing it to the current range of 4.50% to 4.75%. The most recent rate cut occurred in December, when policymakers adjusted their projection from 4 rate cuts to 2 for 2025. This follows an aggressive tightening cycle in which the policy rate increased by 5.25 percentage points between March 2022 and July 2023.